The markets reversed course with force and precision, a sharp recovery after a sharp fall. This followed a clear shift in public messaging from the White House on Greenland and tariffs. Major United States stock indexes closed decisively higher on Wednesday. This came one day after those same indexes recorded their worst session in 3 months. The change was immediate, and it was broad. The catalyst was a series of statements from Donald Trump. He appeared to rule out the use of military force in Greenland. He also stated that tariffs scheduled to take effect on February 1st would not be imposed on 8 NATO allies. The reaction across equity markets was synchronized. The technology-heavy Nasdaq, the blue-chip Dow Jones Industrial Average, and the benchmark S&P 500 each finished the session up by roughly 1.2%. The Dow added nearly 600 points. This rebound followed a public post from the president on Truth Social. In that post, he said that based on what he described as a very productive meeting with the Secretary General of NATO, Mark Rutte, a framework had been formed. The framework, according to the Post, concerned a future deal related to Greenland and, in his words, the entire Arctic region. This was not delivered in isolation. Earlier, in a wide-ranging address at the World Economic Forum in Davos, the president largely focused on his economic record. It was in that setting that he addressed Greenland directly. He stated that he hoped to acquire the island. He also said he would not use force to do so. At the same time, he called for negotiations over a United States acquisition and said that Denmark was not prepared to defend the territory. The tone stood in contrast to the prior session. On Tuesday, markets had sold off sharply. The Nasdaq fell 2.4%. The S&P 500 declined 2.1%. The Dow dropped 1.8%. Those moves marked the worst day for all 3 indexes since October 10th. The decline followed threats from the president to impose new tariffs on 8 NATO allies. Those threats were tied to opposition from those countries to his desired sale of Greenland to the United States. This sequence matters. First, the threat, then the sell-off, then the pullback from force and tariffs, then the rebound. Alongside equities, other markets moved as well. Safe haven demand showed itself clearly. Gold futures climbed to a fresh all-time high early Wednesday. Prices reached nearly $4,900 an ounce. Later in the day, gold was still higher by 0.9%, trading at roughly $4,810 an ounce. This movement coincided with a shift in bond yields. The yield on the 10-year United States Treasury slipped to around 4.26%. That followed a close of 4.30% on Tuesday. Tuesday's close was the highest closing level for that yield since August 21st. That yield influences interest rates across the economy. Mortgages, consumer loans, broad credit conditions. Other asset classes reflected a more muted response. Bitcoin traded near $89,800. It was slightly higher on the day. The United States Dollar Index, which measures the greenback against a basket of global currencies, rose 0.2%. It stood at 98.82. Energy markets also moved. West Texas Intermediate Crude Futures, the United States benchmark, gained 0.5%. Oil traded at $60.65 per barrel. Within equities, leadership was concentrated in specific sectors. Chipmakers led the advance. Shares of Intel rose more than 11%. Advanced Micro Devices gained 7.5%. Both were among the top advancers in the S&P 500. Most large technology firms ended the day higher. All of the so-called Magnificent Seven closed up, with one exception. Microsoft finished lower. Not every stock participated in the rally. In the same benchmark index, Kraft Heinz was among the biggest decliners. Its shares fell roughly 5.5%. The move followed a regulatory filing. That filing disclosed that Berkshire Hathaway may sell up to 325 million shares of Kraft Heinz stock. Post-earnings reactions added further texture. Shares of Netflix dropped nearly 2%. United Airlines rose more than 2%. Johnson & Johnson closed slightly lower. Away from equities, the physical energy system came into focus. United States natural gas prices surged for a second consecutive day. The driver was weather. Brutal Arctic cold pressed down on much of the country. Futures tied to the Henry Hub benchmark surged 29% on Wednesday alone. Across the holiday-shortened week, natural gas prices rose about 60%. That marked the largest two-day gain on record. Nearly half of American households rely on natural gas as their primary heating source. The price rally reflected expectations of high demand. Sub-freezing temperatures were forecast to extend through the end of January across a significant portion of the United States. There was one offset. Consumers would not feel these higher prices immediately in their heating bills. The picture that emerged by the close of trading was one of rapid repricing. Risk assets responded to the removal, or at least the postponement, of immediate policy pressure. Safe havens reflected both relief and residual uncertainty. At the center remained Greenland, not as an abstract idea, but as a stated objective, discussed publicly, and tied directly to market-moving policy threats. The president's remarks in Davos were explicit. He said he would not use force. He said negotiations were necessary. He said Denmark was not prepared to defend the island. These statements followed days of tariff threats. They followed opposition from NATO allies. They followed a sharp equity sell-off. The response from markets was equally explicit. Prices fell, then prices rose. By Wednesday's close, the major indexes had recovered roughly 1.2% each. The Dow had added nearly 600 points. Gold sat near record levels. Bond yields eased from recent highs. This sequence unfolded against a defined timeline. Tuesday's sell-off marked the worst day since October 10th. Wednesday's rebound followed the Davos Address and the Truth Social post. The date was January 21st, 2026. The timestamp on the report was 4:02 p.m. Eastern Standard Time. The information was published, the prices were recorded, the statements were made on the record. Alongside this market coverage, a separate development was also reported. Warren Buffett recently viewed an artificial intelligence-generated video of himself. He said it was realistic enough to fool members of his own family. That experience led him to compare artificial intelligence to nuclear weapons. He described both as powerful, irreversible, and impossible to control. He made those remarks during a 2-hour special on CNBC. The program aired on January 13th, 2026. He asked a question: how do you put the genie back in the bottle? He said the same problem exists with nuclear weapons. That statement stood on its own. Documented. Aired. Quoted. Together, these developments closed the day. Markets had moved. Statements had been made. Prices had adjusted. No forecasts were required. The sequence was already visible. The implications settled across markets slowly, not emotionally. This was not a rally built on surprise earnings or unexpected data. It followed statements, timing, and removal of near-term pressure. The sequence began with policy language. It ended with price movement. Nothing in between was hidden. The prior session's decline established the baseline. All three major indexes recorded their worst day since October 10th. That decline followed explicit threats of new tariffs tied to opposition over Greenland. The next day reversed that tone. Military force was ruled out publicly. Tariffs scheduled for February 1st were taken off the table. The language was direct. Markets responded accordingly. The Nasdaq, the S&P 500, and the Dow all rose by about 1.2%. The Dow added nearly 600 points in a single session. This was not isolated to equities. Gold reached a new all-time high early in the day. Even after pulling back slightly, it remained higher by 0.9%. Bond yields moved in the opposite direction. The 10-year Treasury yield slipped from its highest close since late August. That decline carried implications across consumer lending and mortgage rates. Bitcoin remained near $89,800. The move was modest. The signal was stability rather than acceleration. The dollar strengthened slightly. A 0.2% rise placed the index at 98.82. This reflected relative calm rather than flight. Energy markets showed divergence. Crude oil moved higher by 0.5%. Natural gas surged dramatically. That surge was not tied to policy. It was tied to weather. Futures linked to the Henry Hub benchmark rose 29% in one day. Over the holiday-shortened week, prices were up about 60%. This marked the largest two-day gain on record. Nearly half of United States households rely on natural gas for heating. The rally reflected expectations of high demand. Sub-freezing temperatures were forecast to persist through the end of January. There was an important qualifier. Those higher prices would not immediately impact consumer heating bills. The structure of billing and contracts delays the effect. Within equities, leadership came from semiconductors. Intel rose more than 11%. Advanced micro devices gained 7.5%. These moves placed both among the top advancers in the S&P 500. The broader technology cohort followed. All major firms in that group closed higher except one. Microsoft finished the session lower. The exception stood out because it was singular. Not all sectors shared in the advance. Kraft Heinz fell roughly 5.5%. The decline followed a regulatory filing. That filing stated that Berkshire Hathaway may sell up to 325 million shares. The disclosure was factual. The reaction was immediate. Post-earnings trading added further differentiation. Netflix declined nearly 2%. United Airlines rose more than 2%. Johnson & Johnson closed slightly lower. These movements were not framed by narrative. They were responses to specific disclosures and results. At the center of the day's movement remained Greenland, not as a hypothetical, as an explicitly stated objective. In Davos, the president addressed the issue directly. He said he hoped to acquire the island. He said he would not use force. He also said negotiations were required. He stated that Denmark was not prepared to defend Greenland. Those words were delivered publicly. The remarks followed weeks of rhetoric. They followed tariff threats. They followed opposition from NATO allies. Markets processed the full arc. Threats led to a sell-off. Reversal of tone led to a rebound. This sequence unfolded over 48 hours. 2 speeches. One sell-off, one recovery. The meeting with the NATO Secretary General was referenced explicitly. The president described it as very productive. He said a framework had been formed. That framework was described as relating to Greenland and the broader Arctic region. No additional detail was provided in the statement. The market reaction required none. This was not theoretical. The statements were published. The prices were recorded. By the close of trading on Wednesday, the repricing was complete. Equities had recovered. Safe havens remained elevated. Yields eased. The date was January 21, 2026. The report was time-stamped 4:02 p.m. Eastern Standard Time. The byline was Lyle Needon's. Alongside this market coverage, another report circulated. It concerned artificial intelligence. Warren Buffett had viewed an AI-generated video of himself. He said it was realistic enough to fool members of his own family. That experience led to a comparison. He compared artificial intelligence to nuclear weapons. He described both as powerful and irreversible. He said they were impossible to control. He made those comments during a 2-hour special broadcast on CNBC. The program aired on January 13, 2026. He asked how the genie could be put back in the bottle. He said the same problem exists with nuclear weapons. These remarks were presented separately. They did not intersect with the market movements of the day. They were reported as context. Taken together, the day closed without ambiguity. The sell-off had a cause. The rebound had a cause. Statements regarding force and tariffs changed. Markets adjusted. Energy prices responded to weather. Gold responded to uncertainty. Yields responded to relief. Nothing required interpretation beyond what was stated. The information was public. The reaction was immediate. By the end of the session, clarity replaced volatility. Not because uncertainty vanished, but because the immediate triggers were addressed. The process continued, documented, observable. The closing picture remained stable because the inputs were known. No new announcements followed. No additional threats were introduced. Markets settled into the information that had already been released. Force was ruled out. Tariffs were postponed. The language was public and specific. This mattered because the previous decline was also driven by public language. Threats of new tariffs had been stated openly. Those threats were tied directly to opposition from 8 NATO allies regarding Greenland. When those threats were active, markets sold off. When those threats were withdrawn, markets recovered. The mechanism was visible. The president's statements in Davos did not add new conditions. They clarified existing ones. He reiterated his interest in acquiring Greenland. He reiterated that he would not use military force. He called for negotiations. He stated that Denmark was not prepared to defend the island. Those remarks were delivered during a formal address at the World Economic Forum. The subsequent message on Truth Social reinforced the shift. It referenced a meeting with the NATO Secretary General. It described the meeting as very productive. It stated that a framework had been formed. That framework was said to relate to Greenland and the entire Arctic region. No timelines were provided. No enforcement mechanisms were described. Markets did not require further detail. The immediate pressure point had been removed. The day before, the Nasdaq had fallen 2.4%. The S&P 500 had declined 2.1%. The Dow had dropped 1.8%. Those moves marked the worst session since October 10th. They followed the tariff threats. They followed opposition from allies. On Wednesday, the reversal was nearly symmetrical. Each major index rose by about 1.2%. The Dow added nearly 600 points. This did not erase the prior decline. It rebalanced it. Elsewhere, safe haven assets held their ground. Gold reached a new all-time high early in the day. Even after easing slightly, it remained higher. Gold traded near $4,810 an ounce. The earlier high was nearly $4,900. The move reflected continued demand. Bond markets responded differently. The 10-year Treasury yield slipped to roughly 4.26%. This followed a close of 4.30% on Tuesday. That Tuesday close had been the highest since August 21st. The pullback suggested easing pressure, not reversal, but adjustment. The yield influences borrowing costs across the economy, mortgages, consumer loans, credit conditions. Digital assets were comparatively steady. Bitcoin traded around $89,800. The change was slight. The tone was neutral. The dollar strengthened marginally. The index rose 0.2%. It stood at 98.82. Energy markets reflected two different forces. Oil prices moved higher by 0.5%. West Texas Intermediate traded at $60.65 per barrel. Natural gas prices surged. This was not tied to policy or geopolitics. It was tied to temperature. Futures based on the Henry Hub benchmark jumped 29% in one session. Across the holiday-shortened week, prices were up about 60%. That was the largest two-day gain on record. Nearly half of American households depend on natural gas for heating. The rally reflected expectations of strong demand. Sub-freezing temperatures were forecast to persist through the end of January. There was a delay in consumer impact. Higher spot prices would not immediately affect heating bills. The structure of contracts prevents instant pass-through. Equity leadership remained concentrated. Semiconductor stocks led the advance. Intel rose more than 11%. Advanced micro devices gained 7.5%. Both were among the strongest performers in the S&P 500. Most large technology companies finished higher. All but one of the largest names closed in positive territory. Microsoft was the exception. Decliners were present as well. Kraft Heinz fell roughly 5.5%. The move followed a regulatory disclosure. That disclosure stated that Berkshire Hathaway may sell up to 325 million shares. The filing did not confirm a sale. It stated the possibility. The market responded to the disclosure itself. The price moved accordingly. Post-earnings activity added additional variation. Netflix shares declined nearly 2%. United Airlines shares rose more than 2%. Johnson & Johnson stock closed slightly lower. Each move followed company-specific information. None altered the broader market narrative. The reporting date was clear, January 21st, 2026. The timestamp was 4:02 p.m. Eastern Standard Time. The byline identified the author, Lyle Needens. Alongside this market report, a separate item was published. It focused on artificial intelligence. Warren Buffett had watched an AI-generated video of himself. He said it was realistic enough to fool members of his own family. That experience led him to draw a comparison. He compared artificial intelligence to nuclear weapons. He described both as powerful. He described both as irreversible. He said they were impossible to control. He asked how the genie could be put back in the bottle. He said the same problem exists with nuclear weapons. Those remarks were made during a 2-hour special on CNBC. The program aired on January 13th, 2026. The comment stood alone. It was reported as a separate development. It did not intersect with the day's market movements. By the end of Wednesday's session, the flow of information had stabilized. The immediate sources of volatility had been addressed. Markets reflected that adjustment. There were no forecasts embedded in the data. No projections were required. Statements were made. Prices moved. The process unfolded in sequence. Public language changed. Market pricing followed. By the close, the events of the prior 48 hours were fully reflected. Nothing remained pending. Nothing was implied beyond what had already been stated. The situation remained defined by published information, documented, observable, and already in motion.